Ryan Littlestone is about to take the stage. And Brian, get your bodyguards out. Really looking forward to talking to you. Sorry, I don't remember talking to you many years ago on FX Street in Lar. Welcome to F.A.C.E, Ryan. You're now the presenter.
Yep. Hi, Dale. Can everyone hear me okay?
Can hear you, Ryan. Okay, so are you an Aussie?
Yeah, just at the moment, that's just sitting with my charts on. I've got a few here that we can go through.
There they are, buddy. So thank you so much for coming in today, Ryan. Our whole team respects you, and really nice to have my memory refreshed here. And you know, before we get to the markets, what I've been doing here on F.A.C.E is, I think a lot of people like to know, because everyone in trading has had a long and winding road on their journey, how you got started in the business, who influenced you, and, you know, just a little bit about your journey, buddy.
Yeah, certainly. And just like to say thanks for having me. The respect is mutual back at you guys. I think you guys do a wonderful job. You, of course, Dale, been in the business many, many years. It was a long time when you first interviewed me, 2012, 2013. So
I remember now.
Yeah, I think we were talking oil or something at the time. We were probably up at 150 bucks or something.
The good old days.
Yeah, the good old days. But I've been in the markets, you lose count sometimes, over 25 years. Started off on the LME working for an old company called Rudolph Wolf.
Remember.
Went from there down to the live floor. That's where I really got the trading bug. Started off broking down there, then went local, trading my own money. And, you know, in the early 90s, from that point, I, as I say, got the trading bug and been trading my own account ever since. And
how fortunate that, you know, Ryan, weren't we lucky and fortunate that we came into the business when open outcry was popular and you could get a job or do something in an exchange and rub elbows with people who were doing it for a living and have, you know, press the flesh and really have develop relationships with people and learn a lot from people, compared to the struggles that people who are trying to break into the trading industry now as a trader have to have such a fine discernment between what is junk and what is practical. We really had a nice advantage, didn't we?
Oh, definitely. I mean, it's probably one of my, in my career, it's one of my biggest regrets is that all went down and all folded. Because
they're all bowling alleys now.
Yeah, it was a whole different mentality of learning how to trade. And it was a big eye opener for me, because I went from being a broker, you know, sitting on a desk filling orders on the LME, on futures, you know, every single market around the globe. And even down on the floor, it's easy, if you like, to be able to fill orders. When you make that step into trading your own money, I remember distinctly my first day in the pit, I stood there, my own money, looking at the prices on the board, listening to everyone shouting around and think to myself, everything I've known for the last 3, 4, 5 years means nothing. I don't know right this second where that price is going up or down. And it's bang, it hits you, and then you've got to suddenly wake up and think, right, I've got to learn this stuff. So you learn it, you get into the habit of it. But like you say, you know, that all went. And when I went back to full-time trading in 2010, again, it was another learning process. You know, I started off with the charts and MetaTrader and all those, slamming all the indicators on. You know, my charts used to look like the London Underground map. And you sit and you think, I still don't know where the price is going. I've got all this crap on my screen. I don't know where the price is going. So you have to go back to basics. They're pretty,
though. They're like artwork. They're pretty. You know, Ryan, you bring up a great point. You know, after open outcry went away, a lot of guys, even though they were trading their own account on the floor, it was a different type of trading. They were just trading against paper, etc. And then they had to make the transition to learning how to become directional traders. And many of them were not able to make that transition. Congratulations to you for being able to do so, because, you know, a lot of guys that made millions every year in the pit were not able to go home and sit in front of their workstation and, you know, be a discretionary trader looking for direction in the market. Not an easy transition. Yeah.
That's right, because you could trade two ways down on the floor. One was the correct way, with learning how to trade properly, learn how the markets move properly, learning about the fundamentals, or you could trade off the elbow, as we used to call it. You know, you'd have your little buddies in your little group, and if you're on the offer and they came in with a trade, they'd hit you first, and you know they'd then see you right if you got a bad trade. You know, as I say, we called it elbow trading.
Oh yeah, Genzies.
Yeah, but what I was lucky. I had a couple of great mentors in the pit. You know, they were listen to what they say, and they were deep in the fundamentals. And I learned all that because that's all we had. We didn't have charts. You were looking at a news screen and you saw the data come out, and you had to make a decision on that. And most of the people, it was simple. If the number was up, you bought it. If the number was down, you sold it.
Yeah,
but that was never enough for me. I wanted to know what's going to make that number come in up or down.
So a lot of guys using point and figure charts on the floor by hand. You know, so point and figure, the X and O's were also big. So great story. You know, like you, I spent time as a runner on the floor at the CME before I became a member. You know, taking orders from different branch offices, doing out trades, all of that stuff. So we were very fortunate to have lived in that time. So here we are now, Ryan, and you know, volatility in FX has really been a non-event. And I'm curious as to, you know, what you do in this type of environment where ranges are compressing, and do you move away from the majors and start focusing on the crosses? What chart do we have up here? Okay, so you want to start with the Euro USD weekly.
Yeah, well, I mean, this personifies what you're just saying about, you know, volatility and how you adjust. And it is a big adjustment because, as you say, you know, some traders who have coming into this game you know, we've just come off the back of a financial crisis that's lasted 7-8 years. You know, if you were 12, 13 years of age back when this all started, you're now 19, 20, just get into trading. You don't know what it was like before. You don't know what it was like over the period of the crash. So we have, you know, we've been there, seen it, done it with the years we've got behind us. So we know how to adjust to certain market conditions. So like you say, this year so far, latter part of last year, low volatility. You know, there's not been that much going on. So you have to adjust your trading. We're not getting the big, huge ranges anymore. You know,
so
and
do you increase leverage? I mean, I always tell people to use reduced leverage. Does it make sense to increase leverage during this time frame where the average daily trading range is tighter than it's been in years?
I'm inclined to lower it, and the reason is because you can't trust a move. You know, it's no good buying euro dollar here and thinking, yeah, I'll buy it here and it's going to go to 17, 1800. It's not going to happen. If it does, it's going to be big news that drives it there. But in the everyday moves that we're seeing, you can't buy euro dollar here and think, oh, it's going to go up. You can't trust what we're seeing, and because these ranges are tight, you don't want to go overboard on leverage, because if it turns against you, if you're trying to grab 20 pips here and there, if it turns against you, as it can do, you increase your losses.
You know, I want to ask you, as a former floor trader, you know what, I came up with my handle, Forex Stop Hunter, because when I was on the floor running orders into the pit, anything that had STP at the end of it was of great interest to the locals, and they knew where they were. And then when they elected stops on either side of the market, you'd actually hear an audible, the noise level would increase almost to a roar. Did you see that on Life? And do you still believe that stop hunts are part of it, but instead of it being the locals, it's the algos and high frequency trading?
Yeah, I mean, we look at stops a lot here at Forex Flow, because we get some of the order information out of the banks, and most interest to me is where the stops are.
Okay.
Not necessarily for the point of view of are they going to get run, but a possible reaction if they do get broken. I mean, here we are looking at the euro dollar chart. I've got the two red lines here, 112, 115. For me, that's the range. It's been the range for the last, 4 months. I've been trading in between that, not so much on the low side, because we haven't got down there as much, but up against this 15 level, it's been a great short. But then, look at this area around early Jan. You know, the guys, we were sitting here, I was thinking, right, are we going to short against this level again? And we were just sitting here looking at the market, and I knew there were stops around, you know, 115.10, and we were just sitting here thinking, this is looking breaky. And if these stops are building and they get tripped, we're going to see a big follow through. So right at that moment, some of the guys went, yep, I agree, and they jumped in, you know, 1470, 80s. I stuck a buy stop in at 1507. Bang, it happened, and we ride the wave higher. Because that's the information we get. We hear that there's stops there. We hear they're growing. The level's been tested and tested and tested. So you know naturally it's building up into a big thing. So when you get breaks like that, bang, it goes. You know,
what do you do the next day? Because a lot of people back then, Ryan, were calling this a major breakout. You know, I'm a believer that Mr. Market is pretty mean, that he's going to shake out as many traders as possible before the move they're looking for occurs, most likely without them. And the next day, it's like the market said, okay, you missed the breakout on that day that you got long and the stops were elected. And the next day it's saying, okay, you missed it yesterday. I'm going to let you in at the breakout again today. What did you do the next day?
Well, the next day, I mean, we managed our trades up. So I was running a stop behind it for that very reason, that if it's going to fake out, I'm gonna lock in the profits. And you sit back and wait, and then you know, the trading stops got hit. We came back under 1500, and then you think to yourself, okay, now we're looking at a failure. The very next key point you're looking for is that confirmation underneath. Once you get back under and it tests and holds, bang, that's you back in for a short. And here we can see on the chart there, just around, you know, the 15th of Jan, we've come back under, bobbled around a bit. We, you know, we had a dip to 1450. I'm assuming you can see my mouse cursor there, can you?
I can.
So bang, up we go, 114.90, hold twice, and off we go. And this is exactly what we did last week. Last week, we had another break over the FOMC. You know, it motored around the area. Then we had to push up to this old fib level.
Yeah,
78. I shorted it, left it alone. Down here, when we came under and got that confirmation, bang, I was short at 98 and rode it all the way back down again. Because
would you consider your trading scalping?
At the moment, yeah. By my main trading methods are long term. I like the big long trends. I like getting in early in the fundamentals, the changes. But right now, I'm in short term mode. You know, I get into the trade. Sorry?
You know, sometimes guys like, you know, that like to have long term trades on, have biases and ideas of what they may, it hasn't developed yet, but they see it developing. Do you see anything, any of those trends maybe that haven't begun to trend yet, but are in the embryonic or developing stage of turning into what you're looking for?
Yeah, very much. The big one we've got on our radar, and we've had it for a couple of years, but it's sort of waiting for other pieces of the puzzle to fall into place, is the Bank of Japan and yen. You know, they're still down the rabbit hole on QE, and I think they may have missed their opportunity last year to indicate what they're going to do and maybe scale back a bit. And that's going to be the net for the yen, especially. It's going to be the next big trending move. You know, we're going to see big things coming for that. As you know,
so you're talking about like 120-ish type of yen, big move to the upside?
No, I think it's
US dollar yen.
Yeah. Yeah. Dollar yen. Yeah. You know, we're going to see.
So you're looking. Will that be a risk-off move in equities, or is that going to be mainly tied to yields? Because at times the yen will connect and disconnect to different asset classes. What are you thinking?
Well, actually, just to go back, I think it's a buy for the yen, because obviously, as a central bank tightens, it's naturally good for the currency. But yeah, particularly with Japan, it is going to be a stock move in the Nikkei. Because the Bank of Japan are propping up after the stock market anyway, and it's one of these situations which it's going to be really hard. And I think it's going to be really messy. It's not going to be like the Fed, where it's going to be long drawn out and, you know, pretty well managed. I think it's got the case to be very, very messy, and that also can obviously feed into the other pairs, feed into the crosses, feed into dollar yen. You know, the US and Japan, their economies are quite heavily interlinked.
Do you have any levels on the weekly or monthly or daily that you're looking for where you might begin to implement a campaign trade of short US dollar yen?
Yeah, well, it's twofold. In terms of what we're talking about, it's long-term trend at the Bank of Japan. We've got to see certain things fall into place. The Fed, get to their normalization point. The economies, get into a neutral level or a level where we're just tinkering around the edges with monetary policy. And that's when the Bank of Japan have then got to step up and say, right, inflation's where we want it. The economy's okay, maybe not hugely booming, but we're doing okay. Now we've got to roll out and roll back on all this stuff. We're doing all this QQE and the yield curve and the ETF buying and all that. And they've got to manage that. Now, they've got one or two options. They can either long-term it and do it over the next 50 years, or they can do some short-term moves. But regarding the pricing, at the moment, I've got the dollar yen chart up there. Again, we've got two big levels to look at. We've got this 114.50 area. Again, another long-term, all the way back to 2016, 17, this level up here. A big, strong level. This 108 level is a key level as well. We went through on the flash crash. And
I wanted to ask you that before we move on. As a trader and technician, do you pay attention to those wicks going forward after an event like that? So is that an important low to you, even though it was there for about 5 seconds?
It's an important low because if you look, it pretty much matched that early 2018 low. So there was a reason why it stopped there. You've got to take it with a pinch of salt because it is a flash crash move. But what I tend to come back to is this area here straight after. What does the price do straight after? And we had a bit of fumbling around, but the key point was, let's zoom that in. The key point was we got back above this 108 level, and that built the base again. And we can see from earlier back in late 2017, we had a test the level, broke under, became resistance, break above, became support. This is big long-term levels. And when you get those levels, same up here with the 114.50, they're the ones you want to trade. You can have a lot of confidence in these levels.
What the lines on your chart, the green and the blue, they're moving averages. What moving averages are they?
Simple moving averages. The green is the 200, blue is the 100, and the brown is the 55.
Okay. All right. So we have, it looks like they're beginning to pinch together. Maybe we head into that zone. Do you use them for that as far as where a market could go to and still be bad? How do you use your moving averages, Brian?
Yeah, I use it the same way as most of my tech. If we get good confluence areas, say if the 55 comes down to meet this 1080 area, that's a level I'm looking at. The same up here, 1175. It's all, the more tech you have at a level, the greater the confluence, the more faith I tend to put in them.
Okay. And anything else besides US dollar yen that you have a macro view on, you want to share? Where's your head at with gold?
Gold, not really looked at gold for quite a while.
Okay, so then
really
forget
the only
it.
other one I've got is
what are you looking? Yeah, you don't have to go off the cuff on something you're not paying attention to.
No, that's
what else are you? What else are you paying attention to besides US dollar?
Can I mention the B word?
What's that?
Brexit.
Oh yeah, okay, yeah. Let's talk about it.
Yeah. So I'm actually once again I'm scaling in small longs in cable. This is a trade that over the various different events that have gone on through Brexit, a couple of them I've traded on the long side for positive outcome. It's getting to the point now on Brexit where the clock is running down. We're getting to a point it's either going to be decisions coming one way or another. I need an interest in that. And I haven't traded the pound a lot for the last couple of years because it's been so volatile and a complete poop show. I've pretty much steered clear. It's been too risky for me. But now I want to be long because I feel there's a deal coming. There's too much at stake not to have a deal coming. And the options that are on the table now are more coming around to a deal of some sort, or indeed no Brexit. So one way or another, the positives are lining up more than the negatives. The problem we have obviously is riding out the intraday noise. We're under 29, we're under 30 now, 130 now at the moment. I've been scaling in as usual too early. I mean, from 130, 180, sort of every 50, 70 pips down. But I'm happy with that. I mean, very small. If we get under 127, I'll have a reassessment point. But I'm going to sit on this and see where we come after March.
So kind of a mental stop instead of a hard stop at that level?
Yeah, I've got it actually in on my trades because I always have a disaster stop.
Okay.
Whatever I do.
Because, you know, I used to use mental stops. And the last time I used a mental stop, I ended up in a mental institution.
Well, that's right. I always have a disaster stop. If I'm trading long term,
okay.
500 pips.
Yeah, like fail-safe.
Yeah.
Just in case something crazy happens.
Yeah, then you adjust it as the price action unfolds.
Okay. So you have a lot of respect from our team, and you said that you feel the same way about our work. So why don't you talk about what you do at your company, you know, what your model is, and perhaps, you know, you can show your website, and so that people that are interested to check out Forex Flow Live would know how to get there and what you guys offer.
Yeah, definitely. Well, I came into this game, as you know, at Forex Live. We're dealing the news and analysis on the markets, and that's something that I've grown into, if you like. So I've got the website running, which I do pretty much my own analysis. It's more trade orientated, so I talk about trading, what these numbers mean actually for market moves, what the fundamentals mean.
So you're mentoring your community.
Yeah, exactly. My main product is our Forex Flow trading platform, which is
I looked at it. Very cool. Why don't you show it?
Yeah, the platform, I'll have to see if I can get it up. It's on my other PC because it's
should always be prepared, Ryan, to do a commercial.
Right. Okay, right. I'll do that. Okay. The platform is basically it's chat rooms, and it's got some great tools on there. We list the Forex option expiries in great detail, Forex orders live. We've got a great live data calendar in there, several other tools, but it is predominantly to help traders along. You know, we're lucky. We've been in this game a long time. We've learned a great deal. Unfortunately, we can't put it in pill form and give it to people. So what I try to do is, as you say, mentor people, show them how to trade properly, because the majority of people we speak to, they just don't know how to trade properly. They always want to look at where the price is going. They never understand it's not about that. It's about.
I'm showing your website now, Ryan. Okay.
Okay. Yeah. So that's the website.
All right. Okay. And the Flow Live news stream, it's taking a little time to load here.
Yeah, it does take a bit of time to load. Yeah.
But you know, you have a lot of different features. What's Flow TV? Kind of like a live streaming video of what you guys do during your sessions?
That can be anything. It can be a day-to-day video that I do, you know, a quick snapshot of a market, or I do some videos for some guys at Core TV for the investing channel. So that we just pop up, you know, anything that's fresh and we've just done pops up in there. The Flow platform, if you want to click on that, give you a rough idea of what it looks like.
Got it.
So in there, we place our trades. All our traders trade live. We don't, you know, we're very strict on the honesty side of it. If you're doing a trade, we don't want to know about it 15 minutes after it's happened. We want to know your levels, you know, and if the market's moved 10, 15 pips, we don't want to hear about it. You know, we try and keep everything live, everything above board, because that's the only way you can learn. It's no good me saying, you know, the price in cable now is trading 129.63. Oh, I sold that 10 minutes ago at 130. You know, no one's going to listen. No one's going to believe you've got the integrity for that.
Your platform is very interactive. Kind of reminds me of what I did at F.A.C.E. Let me ask you this. I'm a big believer in communities, and you attract very good traders into your community, and they share their ideas. I remember times walking in and not having one idea, and because of the community and people I got used to knowing that were very good, I'd have compelling setups to consider, even if I came in with a blank slate. Do you believe that communities can create a mastermind type of environment?
Most definitely, 100% without a shadow of a doubt. I've got loads of great guys in here. I've got an ex-interbank trader, who was in Japan for 10 years, and he knows his onions inside out. We've got great technical traders, but it is the community spirit, and it comes back to those floor days, because you had that environment. Even when you're on the trading desk, you had an environment where you could speak to the people next to you, you could bounce ideas off of, or they might come up with a reason you hadn't thought of why you shouldn't enter a trade. And,
Yes.
Collectively, we've had some fantastic trades. Dollar CAD over the BOC last year. We had setups running into it. We knew what was going to happen. We knew how it was going to go. Trades were set up, bang, the whole room profits, those big trades.
I don't know how you feel, but mentoring people, I'm happier when they're doing well.
Yeah,
even if I miss something, it's reward. It's psychic. It doesn't show up in your account, but it's kind of like psychic capital gain.
It's fantastic when you see all the comments and people posting, and they're saying, and we've put it together a big plan. Yep, I've just bought here. Yep, I've just bought here. Yep, I'm in here, or I'm laying my orders here. And then 10 minutes later, bang, it happens, and you know that everyone's just made money, and it's a lovely warm feeling.
All right. Well, I tell you what, Ryan, I want to thank you so much for coming in today. I love your mission and what you're doing for people, and we share some similar backgrounds, so we're paying it forward. Isn't it?
Yeah.
Besides, if you have children, that what you've done your whole career is kind of like your legacy. Yeah. And what you could leave people would give them ideas that when you're retired on a tropical island, they could use the rest of their trading career, right?
Yeah, I'll get them working first, so just so they know the value of pound.
Yeah, you'd probably be trading under that palm tree anyway, you action junkie. So thank you so much, Ryan. I hope you accept me now calling you my trading warrior brother, and wish you and all your associates and traders that pips rain down on you guys in 2019.
Yeah, and all the same to you, and thank you for having me on. It's been a pleasure.
All right, Ryan. Everyone, this has been Ryan Littlestone, and you could follow him at Forex Flow Live on Twitter, and go to his website, www.forexflowlive.com. That's Turnaround Tuesday, everybody. You're very welcome, Hamid and Nick, and you're welcome, Tom. Enjoy the rest of your day. Remember, don't just count your pips, count your blessings. See everyone tomorrow. See you in private chat, where we have the type of community that Ryan has. And, you have the ability to be in there much longer. You could spend 10 hours a day in the private member chat with, pretty good traders like Blake Morrow. So I'll see everyone tomorrow. Much prosperity the rest of the day. And February is here. Let's make it a great month. Adios, and thanks again, Ryan.
Cheers. Thank you.
Cheers, mate. See, I'm not really from Chicago.